Welcome to Season 3 of the Knack for Business podcast. Over 250 episodes strong, we're here to ignite your entrepreneurial spirit with fresh insights, networking gems, and creative strategies that elevate your game. Are you ready to discover what your Knack for Business truly is?
Today's topic is Accounting Reinvented, Streamline Processes and Slash Costs. Your hosts are Bernie Farnsworth from Creative Insight and Wayne Pratt from Motivate You Inc. So what can you expect from the Knack for Business podcast? Well, it aims to help you find your feet in the business world, whether you're just starting out or you've been at it for a while. In each episode, they dive deep into a particular area of business and explore the ins and outs of that subject. They interview guests that are experts in their field who share their success stories and their experiences. They offer practical tips and advice. Our guest today is Matthew Lipman, Mogul CPA. Matthew is the founder and leader of Mogul CPA, a firm he established in 2023 after identifying a unique opportunity to deliver great value to real estate developers and property managers. A graduate of Concordia's John Molson School of Business with a Bachelor of Commerce in Accounting, Matthew earned his CPA designation in 2016 and completed CPA Canada's in-depth tax course in 2018. His early career saw him specializing in REIT, corporate taxes, at one of the world's largest accounting firms before moving to a boutique firm where he quickly rose to partner. With Mogul CPA, Matthew aims to transform the internal accounting processes for real estate professionals, helping clients save on recurring fees while benefiting from a sophisticated finance department. Matthew also celebrated a personal milestone by getting married over the summer. Congratulations. Do you have a favorite quote or saying, sir?
Thank you for having me, Bernie. It's a good question. I really like this quote by Steve Jobs. Something about innovation distinguishes between a leader and a follower.
The inspiration for Mogul CPA, like why did you leave a mothership of a business to start your own?
Yeah, after working at other accounting offices, some of the biggest in the country, I really felt that clients were being underserved. So I was seeing extremely high rates. Partners at some of these firms would charge like in excess of $1,000 an hour, and even junior staff were being billed out at $350 an hour. At the end of the day, after paying this really high bill, the clients would still lack an understanding in their financial position and in their taxes. The traditional accounting model has been around for decades and maybe even centuries. And there's been a lack of innovation in the space, probably largely because these four big firms control so much of the market and they've been using the same business model for so long. I took the time to think about if there was a different way to structure the services, deliver the same services to the clients, but doing it in a different way that can much better serve the client and deliver more value upfront and in the long term.
I remember a time where a lawyer was going over a shareholder agreement with the team I was working with, and he would prompt, "Do you understand what this means?" And then we'd all go, "We think it means this." And he says, "But wait, there's more." And then he would explain it. For accounting, what's simple in your universe, because it's been well explained, you learned it in school. There's 2, 3 word structure that says you apply this word and this is what follows. Is that the same thing in accounting?
My philosophy is to keep it simple. At the end of the day, what we're trying to do is report the numbers that the business has experienced in the past to different stakeholders, whether it's the government, the investors, or the bank. That's what we're trying to do. I tend to stay away from complicated accounting principles and tax jargon and try and really simplify it for my clients to make it make sense.
Tell me, why do you think compliance accounting has hung around so long?
I think the immediate need is to service the government, right? We need to provide financial statements and our taxes are based off of this starting number, the net income in your financial statements. That's where the government likes to start from. And then they make other adjustments to arrive at taxable income. That's what my belief is. That's the main reason that accounting exists, especially in the markets that are in public. And then, of course, you need to appease the other investors working specifically with real estate clients. There's an obligation for the partner that's managing deal to report the results to the other investors in the project. It is necessary for the investors to gain an understanding about how their investment is performing. So that's why compliance accounting is so important.
Is compliance accounting also audit, or is that two separate things?
I think compliance accounting is just doing the accounting and trying to follow the rules, but there is no report given by the accountant that actually certifies the results. That's where review engagements and audit engagements really come into play, where an accountant comes in, snaps the financial statements and says that they've reviewed it and it's aligned with Canadian or US accounting principles.
You have a four-step process that you apply with clients. How does that work, and what does it provide the client at the end of the day?
Yeah, so I think you're referring to my Accounting Accelerator Program, which is a new program that we've developed at the firm. And basically, it guarantees the client to save $50,000 a year in recurring overhead charges and to turbocharge their accounting. So it's really focused on the internal accounting process, the accounts payable, accounts receivable, bank reconciliations, basically the heavy lifting part of the accounting. And yeah, it's a 4-step process. The first step is that we fire up our exceptional talent acquisition system. My team goes to offshore markets like Morocco and the Philippines, and we find you an all-star accountant to join your team. So that person works directly for you, but you get the benefit of paying the direct cost and all of those savings. So the next step, which is done at the same time, is what I like to call our seamless onboarding and integration system. My team has a call with you and the other managers in your business to understand how you operate from an accounting point of view. We go through all the standard procedures that you're currently using to get your accounting done. We review it, we look for ways to optimize it and make it more efficient. And then we put these processes on paper. This way, once your newly hired offshore staff is hired and has joined your team, they can hit the ground running. They have the framework to start the work and then do all of the recurring work after they've been onboarded.
So when making sure the money's coming in, making sure the bills are getting paid, and allotting the funds to the right accounts. If you have employees, the CPP, and all that good stuff, or maintenance contracts. We're talking about property management, commercial real estate, or development
Yeah.
space. So there's a whole bunch of things that are floating around in that. Is there like a software that you guys would say, listen, if we're going to do this, let's say you've used a spreadsheet to kind of track things, you've kept filing. I'm really talking about you're back in the 70s or 80s,
Mhm.
depending on the age of your client, and you're trying to bring them up to speed. Is there a software platform that you recommend based on size?
But this stage in the 4-step process, like the seamless onboarding integration system, will obviously one of the first steps is identifying what tools the client is using to get their accounting done, right? Specifically in property management, where some of our clients are managing 400 or 500 properties at a time, it's very important to pick the right software to accommodate all of these transactions and make sure that you're not mixing up expenses between different properties. So yes, we will provide a recommendation if it's necessary. If we feel there is value, meaning more efficiency or save costs by changing to a different software. But at the same time, oftentimes clients are reluctant to change their accounting software. So we'll work with whatever software they're currently using. But yes, to answer your question, there's great softwares out there for property management, specifically Yardi, Buildia. There's another one called Resman. They're all great softwares to work with, and we have experience with all of them. At this stage, after the seamless onboarding integration system put into place, you'll have your offshore staff, you'll have your processes, the step-by-step guides for them to follow. The next part of the process is what I call our accountability and support system. You and your offshore staff will have on-demand access to me and my team. Hiring somebody offshore, it's unlikely that they'll know all of the local rules and regulations. So the on-demand support allows them to have direct access to me and my team. Whenever tricky questions come up related to local rules and regulations, they could get an answer right away from us and keep the ball moving. You're getting compliant results right away. My team comes in at the end of the month to review all of that accountant's work. We do the same reviews that the CRA or the IRS does to ensure that the accountant is performing well, that you're actually audit proof, you and your business are audit proof. We make sure that the accountant is delivering results, holding them accountable to the job description we hired them for, and they're actually doing the work from day one. This allows the entrepreneur to step out of accounting, stop worrying, and focus on growing their business, knowing that we're taking care of the accounting. The offshore accountant is doing the job, right? And then the last step of the process is our proactive tax management. At this stage, of course, you'll have your offshore accountant, you'll have your guides, you'll be sure that they're doing all of the work on time and completely and accurately. The next step is really just locking down and dialing in your income taxes and tax management. My team specializes in real estate taxes, meets with you on a quarterly basis to discuss future taxes so that you're not surprised at the end of the year with a tax bill. And we could actively take steps. We take the time to understand your plans are for your business so that we could plan the taxes around the future plans rather than working retrospectively.
One thing that interests me is you talk about going over with the client. Do you have them working against forecasts so that they can use you as like a CFO as well as just last year you did this?
You're asking if we offer cash flow planning. It's definitely something that's readily available for us in real estate. It's a bit easier to predict cash flow than in other businesses because oftentimes the rents are fixed and there's a lot of other fixed costs that don't vary too much. But yeah, it's something that a lot of our clients ask for. Sometimes the banks ask for them if our client is trying to finance a project. We're able to deliver those.
So when you're crossing the path with real estate developers and property managers, if they haven't upped their game from an accounting perspective, what challenges do you normally encounter with where they have either a misperception or misunderstanding of the processes?
Yeah, I think real estate developers are a tricky group to work with because they tend to be real deal makers. They tend to be actual rainmakers. They come in and they're able to raise all of this capital and they're buying $1 million properties and then sinking more money into developing them. They're oftentimes very go personality type. And that's great, but not for accountants because a lot of the time with a real estate developer, they'll tell me, "Matt, I haven't filed my GST, I haven't filed my sales taxes in 3 years." And I'm just like, dude, like, you need to do that. You're gonna get smoked on interest and penalties, but it's just so back of mind for that type of personality type. And I feel like it's often like that in other entrepreneurs where they just can't bear to pay any attention to the accounting. They just want to work on their business. They want to focus on the future. They don't want to work retroactively, which is what accounting focuses on. And that can get them into trouble sometimes, which is why my goal, what I try to provide to clients is to minimize the amount of time they spend on accounting. Like, I don't want them to spend any time at all on it because I see how much they hate it. I take all of that off their plates. At the same time, I want to get all of the benefits from tax savings, avoiding interest and penalties if you just have a good system in place, and also overpaying for local staff when there's such a wealth of offshore accountants that are extremely competent.
So recurring fees, how do you specialize in people? I have a past history of managing a property. It'll have certain operating expenses, certain operating costs. you're the tenant, you want to pay attention to it. If you're the landlord, you want to pay attention to it because you don't want to run a deficit of all of a sudden, the roof's got to get replaced and you got to capitalize it up. So how do you help clients with recurring fees? Because though utilities, et cetera, are recurring fees, how do you help them optimize the results?
The way we, directly help a client with saving or recurring fees is that we provide them with an offshore accountant that charges just a fraction of the price of your local bookkeeper, right? That's probably less competent than this offshore staff. And that charges you 50 or 60 grand a year. There's direct tax savings right there and offshoring and putting the work offshore, dealing with somebody super competent offshore and having my team review their work accountable. So that's a direct cost savings we can provide. I also love to talk about how much time we save the entrepreneur. In property management, accounting is a huge burden because you have to provide monthly or quarterly reports to all of the people whose properties you're managing, right? If you get your property management business to a certain scale, which everybody's obviously trying to do, but turns into I have to send 300 financial reports on a monthly basis. That can be very consuming for the entrepreneur. On average, 26% of their time on accounting, which is completely ridiculous to me. And I know for a fact that they hate doing it. We save them a lot of time, which is their most valuable asset, especially at that stage of the business when they've scaled to a significant size. I think all entrepreneurs realize that time is their most valuable asset, and it's not the cash that they have in the bank. Having somebody control the finances is huge. Just being able to say when you're negotiating an insurance contract or an insurance broker contacts you with a great deal, becoming a dedicated person on your team that you could just send a message to on Teams or on Slack and ask, hey, how much did we pay on insurance for this property last year? You have access to all of the information at the tip of your fingers, so you can make competent business decisions that result in lots of savings.
You have niche marketed your business. And I think that's wonderful. How did you go from a generalist to a specialist?
Yeah, that's a great question. I always had an interest in real estate, even when I was working at Deloitte. But I developed a specialty working with real estate investment trusts on the tax side of things. So I think it really started there. When I decided to leave Deloitte and join a smaller accounting practice, I wanted to make sure that I picked one that was in real estate because I was already so familiar with the industry. As I mentioned before, especially property managers as well as real estate developers, accounting is such an important part of the business because there's so many stakeholders. There's the investors, there's the government, there's the banks, right? Taxes are huge in real estate, property management. There's huge obligations to report to the investors. So I just felt like real estate was a niche that there was a lot of value that I could deliver to.
When you were mentioning during the description, you touched on REITs, real estate investment trusts. Is that something you would bring? Is that a value added box you can bring to a landlord or a developer? How does that work?
A REIT is just a type of corporate structure that you could use to acquire real estate. It's been quite popular among sophisticated tax professionals and advisors because there is a way to pull out the depreciation tax free. It's often overlooked actually by a lot of tax professionals because they tend to focus on general partnership structures or incorporation structures, whereas a REIT could really add a lot of value. That being said, more recently, the federal government has implemented this new type of tax. It's like it's an alternative. It's like kind of it's an alternative tax that makes the REIT structure a bit less appealing, but there's still certainly a time and place for it.
Proactive tax management is an example of that. What other facets should a landlord developer have in the back of their head? I'm going to do a project. Talk with your team, talk with your legal team, talk with your suppliers, etc. Right? But you also talk to the accountant. And is there a proactive piece in that space before something starts? Or is that also when I've got 1,000 doors, 1,000 clients, 1,000 apartments, or 1,000 rentals? How can I make this better? Where does that proactive tax piece come in?
The differentiating factor in our proactive tax services is right there in the name. We're proactive about taxes. I think a lot of entrepreneurs finalize their year end probably one day before the deadline, 6 months after year end. Their accountant may get back to them with their corporate tax return the day before that and get surprised with the amount of taxes they have to pay. If they just get a quick email that, hey, you have to cut a check for 200 or 300 or $400,000 and they get blindsided by that. Yeah, I got news for you. A lot of that money in your bank balance actually doesn't belong to you. It belongs to the CRA. It belongs to the IRS. Being proactive is about making things very simple and knowing how much of that bank balance actually belongs to the CRA or to the IRS well in advance, not 6 months after year end. Being proactive also means that we meet with you on a quarterly basis. We understand what your goals are, what your strategy is, and we could plan the taxes around those goals. For instance, just this week, I had a client call me and wants to rehab and sell off after. And he had already bought an LLC, spent $300 buying an LLC, he was setting up a bank account to get it all done. I said, whoa, let's get some cross-border specialists in. Like, it's something that I know about, but it's not something I'm actually comfortable in providing advice on. But some cross-border specialists in so that you're not paying double tax. You're not paying the IRS and the CRA tax on the same gate. So it's just these things are super important from a tax point of view. If you're doing taxes retroactively, you're going to miss out on major tax savings.
Something that interests me is you mentioned using offshore to save a lot of money and get an affordable service to the client. Tell me about, we all want that person we find to be perfect. Tell me about how you vet a offshore VA accountant person.
Great question. Yeah. So we have a very robust hiring process. Is a lot of competent staff in these remote areas, but the hard part is finding that and locating the one that's right for your business. Our exceptional talent acquisition system shines because it is exceptional at acquiring the right talent. It starts off with the job post, and there's an art to making a job post. We try to make our job post as detailed as possible. We specify every single task that the accountant is going to have to take care of. This way, we take that job post once the staff is hired and use that to judge their performance on a monthly basis. If they've been hitting all of the targets that were in the job post, then we know they're doing a good job. So it really starts in creating the job post. We promote the job post. We have experience working with different job posting boards and websites. We try and get up to 200 candidates for every job that we post. The problem is filtering down those 200 candidates to the best people, right? So we have our own methodology about how we could quickly filter down that the first selection, let's say, to the top 20 candidates. Out of those top 20 candidates, we ask those top 20 candidates to then move on to a paid test. So this test will test their aptitudes in accounting, QuickBooks, English, real estate, and also do a personality test to see if they jive with the entrepreneur, right? And we actually pay them to do this test. It's a 4-hour test. From there, it's easy to pinpoint the top 2 or 3 prospects that move on to the interview stage. At that time, we'd like to involve the client to make sure they think they're a good fit as well. And then the last step before onboarding is background checking them, checking their references, moving on to the onboarding stage.
You find that it's great that you can use an offshore resource, be compliant. You're there to back them up with relevant information for the local jurisdiction. Every city is going to, charge a different property tax.
Hmm.
That handles the processes starting up. You also handle budgets. The reason I'm going to ask this question is sometimes when you're doing a budget, it's if you're going to capitalize hardware. You bought a front end loader and that's your snow removal and your gardening and you're moving it around between the properties, for example. The accountant doesn't have to see the machine. They have to understand the machine. They have to understand the nature of whatever the asset is. It could be the roof.
Mm.
It could be the life cycle of the HVAC system. You have a 200 suite or 200 floor tower. There's a whole bunch of other elements that kind of come into that. How do you then handle where you at least see it once to go, yeah, it's real. There it is. Is that understanding the nature of the hardware and elements of a business? They have inventory. It's their furnishing suites, right? But the question is, how do you handle the part where someone's got to see it, almost to validate it or understand the component?
Yeah, so you're right. There's so many different treatments. Sometimes real estate can be treated as a capital item, right? Like a capital property. But other times, if you're buying and selling real estate, it could be treated as inventory. This is actually a huge risk from a tax point of view because in Canada, capital gains are taxed much differently than active business income, which is what you would get from trading inventory. And what I would say is that know real estate. My team really knows real estate. We've seen so many different types of deals, types of partnerships, types of property managers, all of the craziest repairs and maintenance stories that you could imagine. We get it. Every situation is particular, that's for sure. But because we're so familiar with the industry, nothing ever really catches me off guard.
I know what I spend on fuel, labor, supplies, cleaning supplies. I know that I have to replace, in this case, I got steam to the building. I didn't have to have a heating plant, but
Mhm.
there's a whole hardware piece. Yeah, if that breaks, have a contingency fund, reserve fund,
Yeah,
and build it into a
we
budget.
we do
So
that. We do that. We actually get that question from the banks more often than you might think. One of our clients is looking to make another acquisition, and the banks want to get an idea of what their forecast for the current properties look like, right? How much free cash flow do we expect to have over the next 5 years? So how much debt can they service with that free cash flow? And like I said before, real estate's a good industry for getting actually pretty accurate forecasted cash flow statement because the rents are usually fixed and the other costs are really fixed. We just have to predict what capital expenses are on the horizon. With a good repairs and maintenance team looking after all the properties, they could provide the finance team with accurate figures in terms of what capital expenses are looking like.
Here's a question that I'm interested in. Commercial real estate is one of your biggest clients. With the talk of not working from the office or working from home and how that changes the value of an office building, how proactive do the accountants get in resetting values?
In my point of view, is that I'm working with a lot of offshore staff, and I believe in the ability to be remote, especially when it comes to real estate. I don't think you should necessarily restrict yourself to investments in one jurisdiction or location. I think some of the best deals, you got to keep your eyes open for the best deals, and those often pop up new and emerging towns or cities. And you need to be mobile enough to jump on that. The virtual office model accommodates that more. And although I do see some value to having all of the staff under one roof, it's not something that I prescribe to. I think that if you have, I don't believe in managing a team by looking over their shoulder. I believe in managing a team based on their output, making sure that they're actually delivering on what they promise. You don't need to be looking over their shoulder to measure that output where I stand.
I was asking more about the change of the value of the office building from an accounting perspective.
The change in the value from an accounting point of view, capital assets are carried at cost. So whether they go up or down in value, you'll see the same figure on your balance sheet until you sell it. At that time, you realize the gain. So it's only really at the time that you sell it that you'll be recording a loss or a gain on your financial statements. That's generally the accounting principles surrounding depreciated or impaired values on capital property.
Do you also perform valuations?
We do not. No, but we work with expert evaluators. You need a specific certificate, oftentimes, for that to be accepted by the banks in the case of a refinancing, or the CRA in the case of a disposition. But we have a really great team of appraisers that we love to work with. And also cost seg partners in the States. There's something called cost segregation studies, which allows you to split into different categories. They're all depreciated at different rates. Building has the longest depreciation cycle. The plumbing, the electric, the floors, the drywall, all of these have different useful lives. By doing a cost seg study, you could get more of that depreciation deduction upfront.
At the end of the day, as a, say, a landlord or developer is starting out with a project or has an active project, how do they, and they realize, hang on, I'm not tracking. Maybe they got tagged by CRA going, you filed your taxes. They realize they have a problem they got to fix. And that solution is to find the expert. How do they go about finding that expert? How do they find you versus your competitor? What's the best way to pick the best horse for the race?
Listen, Bertie, I think that I'm the best horse in this race, especially when it comes to real estate investors and property managers, developers. But if you're tuning into this podcast and you're not a part of the real estate industry and you're still looking to figure out what you should look out for, you're trying to find the right accountant to fit your business, I would say that you want somebody specialized in your field. I think that it's super important to have somebody that works almost exclusively in your industry. There's so much more value and tips that you can get from that type of partnership. I think it's important to find an accountant that will do both bookkeeping and year-end tax services. You need to be really tapped in on the bookkeeping to provide meaningful tax advice at year-end. The bookkeeping process and the year-end process are so intertwined that the accountant will be much more efficient if they're taking care of the bookkeeping as well as the year-end services. And then lastly, I would also make sure to check on the price. The traditional accounting model is to go on an hourly basis, and I base my pricing off the amount of time. I think it's really important to offer fixed price mandates, right? So I agree to the price before I do the work. And if I go over budget, I eat that cost, because if I keep passing that on to the entrepreneur, it doesn't really make sense for them, right? They need to understand how much the services are going to cost in an instance. Those would be my 3 pieces of advice.
Matt, what areas do you service?
Yeah, so we cast a pretty wide net. We're currently servicing all of Canada. For Canada, we offer our proactive tax management services, so we could service all of your needs in the full accounting cycle. We also work with entrepreneurs in the US, but for those entrepreneurs, we really focus on the internal accounting portion. And then we'll work with your external tax advisor for the year-end tax services. I have a lot of experience in US tax as well. I have the time to really pay attention to at this stage of my business. So I am looking to bring on a US tax specialist so we can provide our US clients with full service.
So, Matt, if someone goes, hey, I need that guy because my books, CRA loves me too much, and the IRS are looking at me with the hairy eyeball, how do they get a hold of you?
MogulCPA.com. Could jump on mogulcpa.com and you'll be able to book a free consultation with all the links there. And also follow us on Instagram, on YouTube, on Facebook. We actually have a group called Property Management Secrets. I go live in that group once a week with other experts that work with real estate developers and property managers. So you could join us there on a weekly basis. And we have some free resources on our website. We have our guide on how to turbocharge your accounting department and save $50,000 a year. That's, a do-it-yourself guide. And we also have a guide on how to hire top tier offshore accountants for a really good price. So check out our website, check out social media and the Facebook group.
I want to say thank you to Matthew Lipman, my co-host Wayne Pratt, and the Knack for Business listeners. If you are starting out in new commercial real estate, getting into property development, you don't have somebody, reach out to Matt. If you want to understand the implications, how to structure the accounting, the software, etc., he's a good resource to work with. To reach us, info@creativeinsight.com. That's info at KREATIVNSIGHT.com or creativeinsight.com. Wayne, how can folks reach you, sir?
And my website, MOTIVE, the numeral 8, the letter U.ca. And my email is wayne@motivateyou.ca.
If you would like to be a guest on this podcast and share your knowledge, let us know. We would also appreciate your feedback on the content or format. Check the show notes for more details. For these podcasts, we like to acknowledge the support and thanks to the following people. Carl Richards from Podcast Solutions Made Simple, a renowned podcast expert. Fred Crouch, who is the Property Wizard podcaster, where Bernie is a co-host. Jovan Strika from @Hive, a co-working space that is more than just a space. Then Melanie Weber, Bernie's invaluable business partner, and Wayne Pratt from Motive 8U Inc., who serves as both a coach and co-host of these podcasts. Disclaimer. Please note that the Knack for Business podcast episodes are meant solely for educational and general informational purposes. The information and opinions contained within are not intended to be professional advice on any subject matter. The thoughts, views, and opinions expressed by the participants are their own personal beliefs and do not represent the views of the podcast hosts or any affiliated organizations. It is important to note that this podcast is not a replacement for consulting with certified experts in your area who possess knowledge of your unique situation. The hosts of the podcast, along with any participants or affiliated groups, do not take responsibility for any actions taken or not taken based on the information presented in this episode. It is highly recommended that individuals seek guidance from their own personal advisors in fields such as accounting, law, or other pertinent areas prior to undertaking any actions or making decisions that may impact their financial, legal, or other aspects of life.